This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self Storage Podcast. I'm your host, Scott Meyers, and this week's podcast is another in our Platform for Change segments. And simply put, these segments came together by collaborating with my team members who are able to educate me on understanding the lens of the Black community in their everyday experience. So today's guest, Karlton Dennis, is a licensed tax accountant whom I met through our involvement with Forbes magazine and the Forbes Council, and he specializes in helping small business owners and real estate investors bridge the gap between understanding tax planning and implementing tax strategies, as opposed to just doing tax compliance at the end of every year. Now, Karlton has built several highly successful sales teams over several years in his field by taking a page out of the books of people like Jeff Bezos, Elon Musk, and Steve Jobs. Karlton also finds enjoyment in coaching and helping sales teams bridge that gap between closing a deal and losing a deal. And in this interview, we did a deep dive on how to use your KPIs, that's key performance indicators, and dashboards to make strategic decisions in your business rather than hoping there's enough cash at the end of the year to even pay your CPA. So without further ado, I hope you enjoy my wide-ranging conversation with Karlton Dennis. Hey, Karlton, welcome to the show.
Thank you so much for having me, Scott. It's a pleasure to be here.
Well, I've given everybody a little bit of information on your background and your achievements. So if you would, why don't you fill in some of the gaps and then let us know what your focus is and what you've been doing in 2021 so far.
Yeah, absolutely. So give you guys a little background on who I am. I'm a licensed tax strategist, a little bit different than your normal CPA. Pretty much what my background is I focus on helping business owners and real estate investors leverage the tax code so they can reduce their tax bill. And in return, they get to take this information into their CPA's office to just file the tax returns with the CPA, making tax compliance a lot easier as a process. Fast forward to where I'm at right now in 2021, we are back in tax season after a crazy 2020 with COVID and all of the things that happened in that year. And we have a new president. So we're keeping ourselves abreast of any tax law changes that Biden plans on implementing over the next year or so. Probably won't see any changes here in 2020, but definitely some more, or 2021, but definitely some more changes happening in next year, 2022.
So Karlton, that's one of the big, you're working with real estate investors. I'm around real estate investors in our mastermind and at our live events and coaching online. And the big questions are, what is this new administration going to do with real estate? There's been the big questions of capital gains and 1031 tax deferred exchanges. That whole conversation is, as well as are our benefits going away? I mean, the biggest question is what is going to go away? Are there any incentives coming out? How do we navigate this? And my approach has always been, just give me the rule book and we'll continue to play the game just so long as I know what that looks like. So right. I know you don't have a crystal ball, but what are anything that you're seeing or hearing right now, or at least from your standpoint, what do you think the game is going to look like next year?
Yeah, absolutely, Scott. There's truly about 3 different topics that were brought up by the Biden administration that we really need to discuss. Number 1, the 1031 exchange. The 1031 exchange has been in our tax code for quite some time, and it's a huge wealth builder. But Biden did mention that he wants to get rid of the 1031 exchange. I personally, as a tax strategist, and many tax accountants, don't believe that this will be a tax law change that Biden's administration will fully move forward with. However, it is something that we need to be mindful of as investors right now. The second thing we need to be mindful of is the capital gains tax rate. I don't know if you remember back to the speech that he had with Trump when they were doing the rally. Biden had mentioned that he would like to have the capital gains rates jump back up to 28%. That would directly affect all real estate investors. And he's also looking at possibly raising the C Corp tax rate. And I know a lot of my real estate investors sometimes operate management companies through C corporations. So these are the 2 main things that are having an impact. The last being step up in basis, which really impacts generational wealth building. Another item that I really don't see like is going to get impacted, at least not over the next year or 2. But these are the 3 things that we have to be mindful of.
So some of the questions that come up, and I've also tried to, I guess, paint by number to fill in the gaps with regards to cost segregation. What does that look like? A cost seg, is that going to be a benefit that goes away as well? And that one seems to be a little trickier to navigate, but any conversations around that?
So far, there hasn't been any conversations around eliminating the cost segregation study. And a part of the reason why it's going to be hard to eliminate the cost segregation study is because of MAKERS, Modified Adjusted Cost Recovery System. This was implemented back in 1987. Most rental properties are being depreciated on a straight line depreciation schedule, which means equal increments over the course of 27 and a half years or 39 years. However, most real estate should be depreciated on a cost segregation schedule. However, most CPAs don't perform cost segregation studies. They take straight line depreciation. So I don't feel like the cost segregation study is going to go away. However, it's also something that we need to keep ourselves mindful of.
Yep. Well, we in the self-storage world, as you know, we love it because we benefit more than most forms of real estate, because just about all that stuff can be lumped into, being an improvement and being able to accelerate the depreciation. So we'll continue to keep an eye on that. But one of, Karlton, as you and I talked before we hopped on the call, one of the things that I wanted to chat about is, we are, as we're heading into the new year, we're resetting our KPIs, our key performance indicators, and putting those into our dashboard to make sure that we're firing on all cylinders. And we have some folks that are dedicated to a number or several numbers in our organization that they report to on a weekly or a monthly basis. And then, I am looking at those on a regular basis, and I do my own reporting to the team. So even before that, and working with folks that maybe a little bit, their companies aren't as mature, tell me some of the things that you're seeing, whether it be just an individual real estate investor. What are the KPIs, or just some of the, the 5 things that they need to be looking at, or 3 things they need to be looking at every Monday or once a month, just to make sure that things are working well, and what you've seen perhaps for businesses and folks in real estate that haven't been minding these 3 to 5 numbers, what could be the downside of that?
Yeah, absolutely, Scott. So for anyone who doesn't know, KPI stands for Key Performance Indicators. And there are a handful of investors who haven't gotten to the place where they are monitoring KPIs. And part of the reason why is typically they're just watching money come into their bank account and just waiting, hopefully, until the end of the year to do their accounting. But that is such a reactive state to be in. In order to be an effective real estate investor, you must know your numbers in real time. And the only way you're going to be able to know your numbers in real time is if you're doing your accounting in real time. So outside of just tracking the cash flow that is coming in, it's also monitoring the average expense amounts. Has my property taxes increased or decreased year to year? Has my management expenses increased or decreased? Am I now in a position where I'm managing my own properties? Have I thought about charging myself management fees? And if so, how much? How is this going to benefit me from a tax perspective based on the amount I'm charging myself? And if I'm looking to acquire a new rental property, does that mean I need to increase my management fees that I'm charging myself for managing my own investment properties, or decrease my management fees? So understanding your numbers is extremely important because it allows for you to make financial decisions in real time.
So have you set up an actual dashboard for folks? And again, this may be a little bit more advanced, and I know there's some of these plugins that you can buy in different pieces of software, but unless you have a CRM, or even working with an accountant or a bookkeeper on a regular basis that are inputting numbers into these dashboards, are they worthy of looking into buying? Can you set this up on your own, or is it really just taking a look at what you're getting out of QuickBooks on a regular basis to make sure that you're hitting the numbers that you set for yourself?
Without a doubt, I believe that now it does make sense to have an online program such as QuickBooks, where you do track each of your investment properties on its own schedule inside of QuickBooks. However, we in our office do have a separate program where we're tracking KPIs for our clients, and it's made their life a lot easier. And most accounting firms are starting to adopt their own versions, whether it's on an Excel sheet or trying to navigate and create a CRM. But this is definitely a part of the cutting edge that we are trying to get ahead of for our real estate investors.
Mm-hmm. Mm-hmm.
Yeah.
So then I guess a bigger question is, Karlton, then what do you do with that? I mean, I know you and I are both on the Forbes Council. I reached out to you because of what you're doing, which is above just typical CPA work, if you will. There's one thing to be able to gather numbers and do a tax return and then maybe provide some input. But the level of what you bring to investors and other business owners is really, okay, now what do I do with that data, and how do I strategically plan out, the next year, the coming years, and really make decisions in my organization based upon the numbers.
Yep.
Talk a little bit more about how you work with clients, because I think some of our folks may not even know what that looks like, or how they would go about even starting to do that on their own, or
Yes.
seeking out somebody like you to assist them with that.
Absolutely. And I love approaching this conversation because I like to view myself kind of like a doctor. When
Mhm.
you go into a doctor's office, it's pretty hard to just walk in and meet with the doctor right away, right? A nurse typically wants to meet with you first, and she wants to get your height, your weight, your blood pressure, your family history of heart disease. And part of the reason why the nurse is meeting with you is because she doesn't want the doctor to prescribe you anything that could come in the way of hurting you, or might even be something you might be allergic to. And as a tax strategist, we have to think in the same manner. Although our clients are bringing us their situation and what they have going on today, the IRS allows taxpayers up to 3 years to amend their tax return. So, as a strategist, it actually behooves us to understand a little bit more of what type of taxpayer you are. Maybe someone who's conservative, maybe someone who's been aggressive, or someone who's maybe been right in the middle of that, someone who's been leveraging the tax codes all along. But either way, identifying missed opportunity over the last 3 years is effective first. Then we can get into your current situation, kind of like when the doctor's walking into the doctor's office. Now he finally wants to evaluate you for the reasons why you're there. And at this point in time, your tax strategist should have a good idea of what your estimated liability is going to look like for the year based on the income you have coming in. Right now, Scott, we're in the month of February. So we only have about 2 months of income. But based off cash flow and expenses, you can project that income for the remainder of the year. And if we know what your tax liability is going to be based off of that cash flow, then we can back into some financial decisions and some tax strategies such as cost segregations and accelerating depreciation to put ourselves in a better financial position. In return, this can open up immediate cash flow to allow for additional investing.
Mhm. Yeah, so I mean, at the end of the day, once again, the answer is, if you aren't working with somebody to help you make those decisions, or don't even know where to start, burying your head in the sand is not a good option. It is to get in touch with somebody right away, rather than waiting until the end, as you said, at the end of the year. So let's also talk about some specific strategies. We've looked at, a number of which that we counsel and coach people on as well, which is, the ability to go back into previous tax years for like things like cost segregation. But if somebody is still anxious about bringing somebody on right now because they're maybe fearful of what they might find or uncover or shed light on, tell us about some of the benefits of uncovering some of these areas in which you can go back into closed years and claw back some of that money, or carry some of those expenses forward. Or are there any low hanging fruit that, right out of the gate, that people should be looking into that they may not be aware of?
Yeah, absolutely. So, first off, we have to understand that there's a tax year and then there's a tax season, right?
Mhm.
So, most taxpayers think and believe that when they go into their or their tax preparer's office, that they're able to leverage tax strategies to reduce their tax bill. Unfortunately, that is just not the case because the tax year ends on December 31st. So, any meaningful big strategies that you would like to implement would need to have been implemented prior to December 31st. For example, placing children on payroll. The IRS allows for taxpayers to place children on payroll and pay them up to the standard deduction amount, which is $12,400 in 2020, without the child needing to file a tax return or without the child needing to pay payroll taxes. But payroll would have needed to be processed before December 31st. So that strategy would not be a strategy we would go back and implement, neither a management company. However, you can go back and alter depreciation. And cost segregation studies are strategies that you can go back and implement into previously filed tax returns. The real estate professional status is a highly litigated part of the tax law that allows for taxpayers to utilize their passive losses and to turn them into active losses. If you were to go back and do qualify as a real estate professional, you will definitely be waiting for an audit, but that is a strategy that you can go back and do if you qualified in that tax year to be a real estate professional.
Hmm. And so, as you're saying that, another area came to mind, which is, how are folks, or how are you advising folks when it comes to the question of whether to take assistance from the SBA with regards to the PPP and the EIDL? Some are going to be forgiven, some may not, and we don't know on others. Tell us how you've been advising some of your clients with regards to the, I say in air quotes for those aren't watching, the free money that is coming from the government in their business. Tell me a little bit about some of those conversations and how you're guiding those folks.
Well, you just said the term right there, Scott, free money. And that's how a lot of my investors are looking at it. I mean, a lot of my investors are older and may have lived through some of the craziest interest rates that we've ever seen. And so when they see that the SBA is offering interest rates at a maximum 3.75%, they're immediately jumping on it. And I don't blame them. If you're in a state right now where your business was impacted, this is a program that was directly created for you. And even more so, if you're trying to grow your business, why not get some assistance at a lower interest rate? And so the most important thing about these loans is that we educate ourselves on the loans. How does it work? How do I qualify? And how is the loan able to be forgiven if any parts of it are to be forgiven, whether I do the EIDL or the PPP, or if I go through the regular SBA.gov and try to apply for a small base business loan. So it's just really important that you make sure that you do your homework, visit SBA.gov and do some research before you apply.
Mm-hmm. Yep. And that's looking at the same things. And once in a while, we have to take a step back and say, well, if something's too good to be true, then there may be something hanging out here behind this. And so don't be so quick to deploy all that capital unless you need it as well, if you're taking some of that on, because not all of it is truly free. So then let's talk about, Karlton, perhaps then going to the next level. We have in place, when people start out, they're doing their own books, they're doing the bookkeeping, they're doing their tax returns, and then they may hire a bookkeeper and then move up to a CPA, and then moving into perhaps a wealth advisor or an outsourced CFO. And there's a multitude of taglines, as well as letters behind people's names that they can use in the financial world or in accounting to assist us as business owners. Could you kind of break that down for folks as to maybe the size of business and what it looks like, and what types of professionals we could and should be reaching out to as our business continues to grow and scale?
Yes, absolutely. So I'm glad that you brought this one up, because there's a lot of titles, and you kind of need to know the differences between titles and what is important for you to have on your team. And it is important to build a team. If you are someone who is trying to live off passive income, but also avoid taxes at the same time, and also avoid going to jail, and do everything in the best way possible, you're going to need team members. You're going to need a great mortgage lender. You're going to need a title and escrow officer. You're going to need a lawyer. You're going to need a great real estate agent. You're going to need a CPA who files the tax returns. And you're also going to need a tax strategist. Why? Because you're making financial decisions throughout the year. Scott, I get so many phone calls. Karlton, why is it that my CPA is never available? I send them an email. It takes them 2 weeks to respond. Your CPA might be a CPA, right? A certified public accountant, someone who's accounting for every single item that goes inside of the tax return. Whereas your tax strategist, who's someone who's studying the tax law, is there with you to run scenarios when you're thinking about making financial decisions, or you're at the car dealership and thinking about buying a vehicle and whether or not you should get a Tesla, an EV vehicle, or whether you're thinking about setting up an LLC or doing a crowd fund through a syndication. This is that type of person you should probably be consulting with. Now, a tax strategist might also have their enrolled agent's license, which is pretty much just a qualification that the IRS gives to a tax accountant who has passed a certain amount of tests. Enrolled agents are licensed in all 50 states, and they're also very savvy when it comes to representing you in front of the IRS. So those are some of the members that you might want to consider having on your team as you are continuing to invest in real estate and building wealth strategically.
Yep. Good. Well, so in light of an extremely challenging year in 2020, and in many respects, what are some of the ways that you're guiding your clients right now as we come out of COVID? We've come out of a nasty election. We've come out of 2020 a more divisive country in terms of, well, everything, politics, race, you name it. What has that uncovered in terms of, from how somebody is to approach their business in 2020, and more specifically, some of the guidance that you're giving some of your clients that, maybe lessons learned from 2020 as we head into 2021?
Lesson learned from 2020 is the digital space is king. Those who were able to get their ideas, offers, products, services online the fastest were the ones who were able to benefit the most. I also
Hmm.
think it's extremely important to realize how much control was taken from you during COVID and
Hmm.
what you needed to do to get yourself and your business back into a state of control, right? And
Hmm.
so there are certain people who waited and were just waiting for the government to provide them assistance. And then there were others who were taking action and doing actionable steps to support their business in the meantime. We had a lot of clients just outside of the real estate realm who were converting some of their businesses to selling hand sanitizer products online. We had some clients who were
Hmm.
converting
Hmm.
their storage units to selling hand sanitizer and holding their products there. So all I'm getting at is stay in control of your situation by making sure that you're seeking out the right information. And part of the reason why a lot of my clients were able to expand during a year of economic contraction was because of
Hmm.
that mentality that they had was I'm going to be
Hmm.
in control of my own situation. I'm not just going to wait for something to happen.
Hmm. Hmm.
So,
Well, fortunately for us in the self-storage sector, this part of the economy actually benefits from chaos and transition and trauma. When people are moving, when people have lost their jobs or businesses are closing, they put their stuff into storage until things turn back around again. And so, the storage industry largely has benefited from this, but that doesn't mean that it hasn't been challenging. And I guess before we move on as well, we faced a lot of challenges last year, and I know Karlton, you were obviously in the middle of that as well, and having those conversations. And what we've done here in our organization is to shed light on those conversations regarding race, and our platform for change and our podcast as well. And if you would, maybe touch on that a little bit. What did 2020 look like for you and your organization as we're going through the tragedy surrounding George Floyd, and then all the aftermath of that heading into even the election? How did that affect you and your approach to business and perhaps even life in general, if you would?
yeah, absolutely. So, we're a black owned firm and we have been for over 28 years. And, we have a lot of employees that were, impacted during that time period and that whole situation that was going on with George Floyd. And so one of the things that we did in our office was we stopped to have moments to actually discuss it on Zoom video chats because we were in the middle of a pandemic. We weren't in the actual office to really connect with each other and see each other, but we were all experiencing something together. And rather than just talking about it amongst our families, we decided to talk about it amongst our business. And it actually bonded us together and allowed for us to bring up different scenarios and situations that we've each experienced in our own lives in the past. And we all were able to learn from that and allowed for us to connect. Even more so, when I was speaking with some of my clients, I could tell in their voice that, that they were feeling some of the pain that they were seeing online and on the TV. So rather than just kind of ignoring that moment and just strictly focusing on business, is taking the time to be compassionate and affectionate towards people who are understanding what's going on and having a conversation with your clients about it and seeing if it's something that they want to talk about just so you can support them. That was extremely important for us. And all I can say is that that time period showed our nation how strong we are coming together and being able to protest in the ways that we did and being able to make a real change. I know that there were a lot of conversations that occurred in a lot of households that would have never have occurred if it wasn't for the action of the United States citizens after the George Floyd incident.
Mm-hmm. 100%. And those conversations are happening in our household as well. And we're doing our best to continue to keep that conversation going on in our podcast and just in our communications in general. And quite honestly, it did shed a lot of light on some areas personally in my own life. And as we talk as a family and with our employees as well, that as far as we think our company or our country has come along with regards to race issues, we have a long way to go. And it
Yeah.
also shed a lot of light on some areas that I think we're still, unbeknownst to many people, that there just flat out isn't fairness for people of color and ethnicity, and you name it in this country. We have a long ways to go still. And if anything good comes out of the tragic events of 2020 is that I think a movement is afoot now to change that, to right the ship, to make sure that we're all on equal footing rather than just a saying on the back of our currency, period.
Yep, I agree with you, Scott. There's definitely a long ways that we have to go. There's so many people that try to sweep that conversation under the rug and turn another eye, but enough was enough. And I think, the actions of the American people showed that enough was enough. It's time to make a change. And so I'm glad that you have a movement going on your podcast and on your platform to bring awareness to that.
Yeah, well, it's the absolute least we can do. Well, let's, Karlton, tell me about your involvement. Well, first of all, congratulations to be honored to be on the Forbes Council. It's still I think it's been an incredible platform for us to be able to connect and network. And the first time we were even considered, I thought, gosh, you got to be kidding me. But it's been good to see. It's been good to be a part of that. Tell me about now the exposure that has been for your firm and what that has looked like and the connections that you've made and how that's changed your business and perhaps even the approach to it as we go forward in 2021 as well.
Yeah, absolutely. So in 2020, we actually spent a lot of time writing a bunch of Forbes articles because Forbes allows for us to post as many articles as we want. So rather than just kind of being on the sidelines and not helping out these business owners, we started creating all different topics, whether it's surrounding pandemics, investing, business, what you should be thinking about, how to build your sales team. So we posted a lot of articles on Forbes. Not only did that grow our social media channels, because naturally people will find you on Facebook, Instagram, LinkedIn, it ended up leading to more credibility and more customers. And so during a year of economic contraction, like we talked about, Karlton and Associates, our company, we were actually able to expand, and our focus is on marketing. Our biggest efforts is on marketing for the real estate investor and that small business owner, to let them know that there is a way out of paying such high taxes. And it's just seeking out those professionals who are going to show you those tax loopholes and strategies within the tax code.
Yeah, well, that's what I was leading towards, because I've read your articles and they do cover a wide range, and it's not just focused on tax, but on the sales piece that you wrote and on leadership and some of those other areas. Very well written, just very well done. So appreciate you. You are an incredibly well-rounded individual that is doing some incredible things to guide people, not only just with the numbers, but also business in general. And that's why I wanted to have this conversation surrounding just not only the numbers, but how we take those numbers and then put that to our strategies so that we know where we're heading in this year and the upcoming year. So appreciate you and appreciate everything that you've been doing.
Yeah, no, I'm blessed, Scott, honestly, to be in the position that I'm in. Starting out as a football geek, really went to school to pursue football, had no intentions of becoming a tax accountant, and then joining my mother's firm, which she's had for forever, and realizing that she didn't have any sales department or any means of acquiring clients from a sales means. She was just word of mouth and news channel. And then being able to get my tax license, being able to invest in my first rental property, and now realizing so many people don't have an understanding of the tax benefits of investing in real estate. And so really just kind of explaining that in a format that's understandable and digestible, because most people already assume that the tax codes is millions and bajillions of pages. But rather than thinking about that, I want them to think about the wealth they can create through the tax code. And really, there's only about 200 to 300 strategies that you really want to master with a really nice tax accountant who can explain it for you. So.
Well said, my friend.
Yeah.
Well, I appreciate you taking the time out as well, Karlton. I know your time is valuable because you get paid for your time directly. So before we wrap up for today, if you would tell me what you do to feed your mind. Tell me maybe a book that you've been reading recently or something that's had a big impact on you.
Yeah. I definitely love to listen to audibles. I'm always working out, so I like to pop on the headphones and read and listen while I'm running and working out. But the book that I've found a lot of joy in reading as of late, and have shared with a lot of my peers, and also pertains to what's going on right now, the easement that the feds are doing with the printing of money. It's the book called How the Rich Are Getting Richer by Robert Kiyosaki and by Tom Wheelwright. Really explains the benefits of real estate and the tax code, talks about the printing of money and how to leverage debt to your advantage as an investor. So if you're looking for a new read, definitely check that out. Again, it's called How the Rich Are Getting Richer.
Yep, I saw that it was trending. I haven't downloaded it yet, but I'm going to do that as soon as we are done here as well. So with that, Karlton, it's been an honor to have you. It's always been great to reach out to other folks that are on the Forbes Council as well. And so I appreciate, again, everything that you're doing to help the real estate investor. and all those folks that you're touching through the Forbes Network and your own company. So how do people get in touch with you?
People can get in touch with me by following me on social media at Karlton Dentist. They can visit my website at www.karltondentist.com. I'm on TikTok, LinkedIn, Facebook, Instagram. You can type me in on Google, just about every social media channel. And I look forward to connecting with you guys. Visit my YouTube channel as well if you want to learn some tax tips in a fun, educational manner. So yeah, look forward to connecting with you guys. Thank you for those opportunities, Scott.
All right, my pleasure. Thanks, Karlton. And I look forward to continuing the conversation. Take care, bud.
You take care.
All right, bye now. Hey gang, wait, 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.